Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest growing regulated all-in-one trading and investing app. Whether you're looking to invest in US stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome back to the Deep Dive. We've gone through all your sources from January 13th to figure out what's really driving this really complex market. And today we're diving into a market where the narrative is just completely split. I mean, you have capital sprinting for the exits at the exact same moment that major institutions are, finally committing to adoption.
It's a critical mission today. We really need to unpack what these huge ETF outflows actually mean. Then we have to analyze all this pre-CPI data to get a sense of where the Fed is really headed. And then, connect all of that to these foundational institutional steps we're seeing, from tokenized deposits in New York all the way to what's happening in the UAE.
Okay, let's jump right into that conflict then. The immediate market vibe is, well, it's heavy. We're talking about a massive pullback, almost $344 million in ETF outflows in just last 24 hours. And that's on top of all the selling we saw late last week.
That is a lot of capital leaving. It's an important observation for sure. And like you said, it correlates directly with Bitcoin's price drop. But the real question is that just noise? Or is this the first sign that these institutional ETF buyers are actually the first ones to run for the door when things get rocky?
That's the billion-dollar question, isn't it?
Yeah.
It kind of suggests that this whole institutional cohort might have a much shorter tolerance for volatility than we all expected.
Well, despite that huge outflow, the global market cap is surprisingly resilient. It's still holding at just over $3.18 trillion. But if you look at the underlying health, the 24-hour trading volume is only around $116 billion.
And just for context for you listening, that volume, it should ideally be closer to $160 billion. That would signal a really robust, healthy market. What's even more telling, I think, is the sentiment meter. It's stuck firmly in neutral at 41. And that's a pretty big drop from 49 just last week.
That drop is really just the market digesting all this short-term volatility. I mean, we know what caused that temporary spike to 49. It was that brief but pretty potent $5,000 price pump. The one from 88,000 to 92,000 that happened right after President Donald Trump captured Venezuela's so-called dictator.
It's funny, we always talk about technical analysis, but nothing is wilder than a $5,000 price swing tied to, geopolitics.
Yeah.
I mean, capturing a so-called dictator is now a market indicator. That's 2026 for you. But the quick pullback just proves that sustained movement needs fundamental strength, not just these political shockwaves.
It definitely highlights how vulnerable sentiment is to these external non-crypto events. Now, let's look at the structure of the market itself. We talk constantly about decentralization, yet decentralized exchanges, the DEXs, they only accounted for about $9.1 billion in 24-hour volume.
And when you compare that to the overall volume, DEX dominance is hovering at just about 31%. And look, decentralization is the ultimate goal. We all get that. But this metric just shows that centralized platforms are still handling the vast majority of transactions. We really need to hit at least 40% dominance to even start claiming true structural adoption.
Right. But here's the key divergence, the thing that runs completely counter to those ETF outflows. The cash flowing into digital asset treasuries has been on a sustained uptrend for 6 weeks now. In just the last 24 hours, that figure was $4.5 billion.
So wait a minute. You have institutions selling ETFs in the public market with one hand,
Yeah.
and with the other, they're funneling billions into these treasury strategies. What's driving that?
This trend suggests a more fundamental institutional interest. It's likely driven by companies acquiring proof-of-stake tokens to, put on their balance sheets to become network validators. This isn't speculative trading. This is long-term, utility-based investment, and that supports the total value locked, even if the market price is all over the place.
Okay, now for the core assets. Bitcoin's dominance is strong. It's at 57%, trading around $91,292. Altcoins are definitely lagging, which you can really see when you look at Ethereum.
Yeah, ETH dominance is only 11.7%. The price is just under $4,000. When Bitcoin captures this much of the capital, it usually means money is flowing toward the safest, most recognized digital store of value, especially during times of macro uncertainty.
One altcoin making some waves, though, is Ripple. XRP's market cap is up to a pretty notable $125 billion. It's reportedly overtaken Binance's BNB. Now let's contrast the stablecoin volume. Tether USDT handled a colossal $85.4 billion in 24-hour volume. Meanwhile, Circle's USDC was way down at $11.5 billion.
And that disparity is massive. When USDT's volume is almost 7 times that of USDC, it just means that global leverage and the non-US crypto rails are disproportionately relying on that one single coin. And that kind of concentration, well, it creates systemic risk, a massive dependence on just one entity for liquidity and stability.
That's a really crucial point. And speaking of crucial context, let's pivot to something really intriguing in your sources. This sudden surge in privacy coins. Monero just hit a new all-time high.
Monero is absolutely leading this niche, yeah. Market cap of nearly $11 million. But the drop-off is immediate. I mean, Zcash is at $6.5 billion, and the others, like Beldex and Dash, are significantly smaller.
So what's the catalyst for that Monero ATH right now? Doesn't it really seem tied to the broad market being, exuberant?
I see this as a really clear signal that the market is actively seeking a non-KYC refuge. This is being driven by regulatory tightening everywhere else, especially around centralized exchanges and those traditional fiat on-ramps. When regulators squeeze one part of the market, capital flows really fast toward the most robust, decentralized anonymity solution out there. And right now, that's Monero. To understand if all this volatility and this privacy coin surge is sustainable, we have to look outside the crypto bubble. And we have to look straight at the economic engine. The CPI inflation data is being released today. This is the main event. This is what's going to shape the Federal Reserve's next move.
And we can actually forecast the potential CPI outcome. If we analyze the 3 earlier reports from the Bureau of Labor Statistics, the ones on payroll, job openings, and labor turnover, they're all giving us these really strong disinflationary signals.
Okay, so let's start with productivity. The reports show companies are producing more without adding new workers. This higher productivity is inherently disinflationary. So why should our listener care?
Well, because it lowers the cost of goods and services. It's that simple. When production is more efficient, businesses aren't forced to raise prices so aggressively. And that sustained downward pressure on inflation significantly increases the chances of future Fed rate cuts, which is, fundamentally bullish for Bitcoin. And that ties right into the falling unit labor costs. Productivity is rising faster than wages, which means it costs companies less in salary per unit they produce. That just confirms inflation is easing.
And that data is supported by point 3. weaken real wage growth. Workers are barely earning more after you account for inflation, and that limits consumer spending, which reduces demand pressure across the whole economy.
So while that slow spending might slow down short-term risk-taking, it's also creating the long-term low inflation environment that assets like Bitcoin just thrive in. Okay, next up. Cooling labor market conditions. Job openings are lower, hiring is slowing down.
And a cooling labor market slows wage growth, which is really the key to reducing that sticky service inflation. This is a critical sign the economy is moving toward a better balance. More importantly, slowing hiring dramatically increases the odds of Fed rate cuts. And again, that is fundamentally bullish for Bitcoin.
And finally, we're seeing lower quit rates. People aren't leaving their jobs as often for higher pay. This keeps wage pressure under control, keeps inflation stable. A more balanced labor market is just excellent for cryptocurrency stability.
So if we put all 5 of those disinflationary signals together, it makes a positive CPI report highly likely. And that leads us directly to the FOMC meeting forecast.
Okay, so based on this evidence, the Fed has 3 potential paths, if they go with scenario 1. Rate reduction, that is the major immediate catalyst. Lower rates flood the market with liquidity, making crypto extremely attractive. Bullish.
Scenario 2. A rate increase would be decidedly bearish. Higher rates just make traditional, safer investments more appealing, and that would probably draw capital away from high-risk assets like Bitcoin.
And what if they stick with scenario 3? Rates unchanged.
Then we probably just see market consolidation. But the critical thing here is that the underlying disinflationary signals we just talked about, they provide this structural, long-term support for Bitcoin, even without an immediate catalyst.
Okay, shifting gears back to the institutional moves, let's start with future holdings. They've signed a letter of intent to acquire the Sweden-listed H100 group.
This is a highly strategic play. The goal is to rapidly expand H100's Bitcoin treasury and their capital market operations, specifically in Switzerland. They're leveraging local expertise and, local governance to enhance value preservation. The deal is expected to close this month.
And just a quick note for anyone curious, Future Holdings is backed by Adam Back. And given all that long-standing community speculation about his deep involvement in Bitcoin's earliest days, well, this acquisition just keeps feeding that narrative that the Bitcoin heavyweights are actively solidifying its institutional foundation. But moving from speculation to confirmed fact, BNY Mellon is making a huge leap.
A huge leap. BNY Mellon is expanding its digital cash capabilities for institutional clients. They're launching tokenized deposits, which are just digital representations of customer funds held on-chain. The stated goal is to enable programmable cash, improve liquidity, and slash settlement friction.
Okay, but here's where we need to pump the brakes. They're doing this on a private permission blockchain. I mean, to me, that just centralizes trust. It sacrifices the core censorship resistance that makes Bitcoin revolutionary in the first place. It feels like really sophisticated database software, not true decentralized innovation. Can't a central authority just manipulate the ledger if they control who validates transactions?
Well, that is the crucial difference. It's the trust model. In their system, the double spending problem is prevented by a centralized authority or a vetted consortium that controls the validation. The integrity of the ledger is maintained within that specific controlled environment. It prioritizes control and compliance, which, institutions demand, over the open, anonymous, trustless decentralization of Bitcoin. It's a bank-centric solution. Or to put it another way, it's not a Bitcoin-centric one.
It's a completely different philosophical approach to digital money, built on trust instead of proof. And finally, on the institutional front, Andreessen Horowitz, as Duchan's Varm, has raised a massive $15 billion for investments across tech, and that includes crypto.
And their mission is deeply philosophical. It's strategic. They are focused on U.S. leadership in technology, aiming to ensure America dominates the next 100 years of innovation. So this raise is explicitly targeted at building generational companies that can compete globally, especially against China, by backing foundational entrepreneurs in AI and crypto.
Now let's turn to the Middle East, where both major news items today really reinforce the UAE's explicit, ambitious goal of becoming a global digital finance hub.
The first one is the MOU between Crypto.com and Changer.e. Changer.e is already regulated by the ADGM, and this partnership is focused squarely on expanding secure, compliant digital asset services, specifically simplifying that really difficult crypto-to-fiat conversion process for both consumers and institutions.
So Crypto.com brings the institutional-grade infrastructure and all the tech solutions, while Changer.e contributes the local regulatory authorization and that deep market knowledge. This focus on compliance and consumer protection is really the cornerstone of the whole region's vision.
Exactly. And the second pivotal piece of news involves Bank. This is one of the region's oldest banks, with assets over 88 billion dirhams. And they've received in-principle approval from the UAE's central bank to issue a dirham-backed stablecoin with a one-to-one peg.
And the timing on this, coinciding with Bank's 50th anniversary, it just positions them as this trusted but also innovative player. Crucially, the stablecoin will be fully backed by segregated dirham reserves. They'll have audited smart contracts and real-time reserve attestations, maximum security.
This is a major geopolitical signal. It's regulated under the 2024 Payment Token Service regulations, and these dirham-backed stablecoins are clearly viewed as complementary to a future central bank digital currency. This move doesn't just benefit Bank, it really cements the UAE as a proactive regional leader in stablecoin regulation.
So what does this all mean for you? Today's deep dive really revealed a moment of profound divergence. You have short-term bearish pressure from that nearly $344 million in ETF outflows, and it's being countered by these overwhelming structural long-term bullish signals. The disinflationary economic data strongly suggests future rate cuts are likely, and major institutional and regional adoption moves from BNY Mellon to Bank are cementing crypto's place in global finance.
And that divergence is exactly where the opportunity lies. But there is one final provocative thought from your source material that touches on the political dimension. The Department of Justice is currently investigating the Federal Reserve Board Chair, Jerome Powell. This is more than just some political headline.
That level of scrutiny really highlights the systemic accountability issues that are just baked into centralized finance. When the governance of the Central Monetary Authority is called into question, and we've seen it historically with various audit issues and recent fraud allegations, it shines this massive spotlight on the necessity of trustless systems.
So, considering the possibility that a Republican federal chair might be appointed who could lower interest rates, which is a major bullish catalyst, and given the systemic accountability issues raised by this DOJ investigation, we'd have to ask, what long-term signal does regulatory focus on the failings of centralized authorities send to the future value proposition of truly decentralized, trustless assets like Bitcoin? That's something for you to mull over as the FOMC meeting approaches.